All right. Hi guys. Good evening. I hope that everyone had a really good day. So today I got a lot of requests. Mostly requested a video on the Sunshine holding. So I'll be looking into Sunshine and HBS, which was the recent IPO. So we'll be going through pretty much everything that we have been going through in terms of how we analyze the chart. So nothing different. So let's quickly get into the chart of Sunshine Holdings first, and then we'll move into the other one. So overall, what we simply always do, we zoom out of the chart and we look at the overall price action. So as of now, we can clearly see that we are extended, but overall we are in an overall uptrend. So if you look at the 20, 50 and the 200-day moving average, you can clearly see that we are in an overall uptrend. So for those of you who are new to my channel, so simply these three moving averages highlights three different time frames. So on the 20, it pretty much highlights the short term time frame. The 50 highlights a more medium term time frame, and then the 200-day moving average gives a more longer term view of the overall price action. So as long as we are above all three of them, it shows that we are in an overall bull market across all three viewpoints: the short term, the medium term, and the long term viewpoint. So overall, we know that from the moving averages and from the overall price action, we can clearly see that we are in an overall uptrend. So in terms of the volume, you can see that volume means expanding as prices are moving higher and then declining as prices are consolidating. So simply put, we can see that we had this very strong up move, and then we also saw similarly that volume expanded as prices moved higher, and we are currently seeing a phase of consolidation over the short term, and similarly we can see the volume declined as prices were consolidating on the shorter term viewpoints. So as of now, we can see that prices are consolidating, possibly signifying a possible move higher again. But let's for us to figure that out, we need to obviously look into more in deeply more into the chart to see whether there are any possible chart patterns and stuff that we can use to predict a possible move higher, or is it going to move lower. So as of now, we can clearly see something very similar, which is the wedge formation over here. Now this looks like a bullish wedge. It is a bullish wedge. However, it's a more smaller part of a much larger pattern. So as of now, if you clearly look at the chart, you guys might be aware that we have a possible bull flag over here. So we can clearly see that the move from this high to this low forms the flag pole, and then this small consolidation phase, which is going against the trend, is will form the bull flag. So overall, we can see the prices are possibly signaling a further continuation to the upside. So do we have confirmation? No, we don't. Why? Because we still don't have a breakout. So without having a valid breakout, we cannot confirm that this is a bull flag at all. So for that, we need to see a breakout. But today we had some very interesting price action. So you can see that prices broke below this lower trend line over here, but we pretty much took off possibly people who had stop losses around this area. We can see a bit of volume coming in, not as much as uh, the average volume across the past few months, but overall we can see that possibly people were stopped out at this level, and eventually we had a nice hammer formation over here. So usually a hammer signals a possible reversal in price action. So if the price is trending down and we see a hammer, that means that most likely we can see a possible upside move. Now overall, we are in an overall consolidation phase. This is not a trending area, so therefore we have to ignore this hammer for, at least I would ignore this candlestick pattern, because it's not coming in a trending market. Now it can be either usually hammers form on a downtrend, so usually it should be possibly we should see a possible stronger move to the downside, and then if we see a hammer formation, then we can possibly expect a reversal to the upside. But as of now, we are in a consolidation phase, so in that sense I'm going to ignore that formation. So overall, what is more important is for us to break above this downward sloping trend line. So let me highlight it for you. This black highlighted trend line is what needs to be broken if we want to see further upside. So how do we confirm a valid breakout? So if you watch my previous videos, I've said that there are several ways we can confirm a breakout, but the two most common things that I use is one, through volume. We need to see above average volume come in on the breakout, and most importantly we need to see price action follow through. So when I say follow through, that simply means we need to see a close above this trend line, and at least a good close, not just a few cents away, but at least a decent amount above the trend line to confirm the breakout. So sometimes there are people who use percentage filters, like say that they will only confirm a breakout if price is close 3% above this downward sloping trend line. So that's another way you can confirm it, but as of now let's just stick to the basics, which is through volume and through price. So therefore we know that there is a possible flag formation here, which possibly indicates that there might be further upside potential on the stock. Now how do we measure price target? So simply put, the same way we do everything, we take the height of the flagpole, which is roughly around, say we take it as 72 rupees, and the lowest point is roughly around 45. So let's take for 72 minus 45 gives you roughly around 27 points, and assuming that we get a breakout around 64, we have a price target of so you add 27 to 64 and you get a price target of roughly around 90 to 91. So we are roughly looking at a possible continuation in price action towards this 90, the low 90s, assuming that we have a proper breakout. Now does that guarantee us that we'll see a move towards the 90s? One, no, absolutely not. Even if we see a valid breakout, there are times if the overall market is weak, we might possibly see a fake out, and prices might overall fake out the buyers and then eventually start moving lower. So that's why you obviously need to have stop levels around your intended risk level. Now for me, there are several stop levels that you can have it at. One is if prices close below this downward sloping trend line, which is this level right here. Let me highlight it in a different color. So if prices close below this red trend line over here, that is possibly a signal for you to stop yourself out, or else the best case stop level for me will be below this low over here. So that's roughly at around 58.20. So let's assume that it's at 58 rupees. So my ideal stop level would go below 58 rupees. So again, I have mentioned in my previous videos that I will not use hard stops. When I say hard stops, that means manually placing your stop order so that your broker can execute your stop. So I would never do that. I usually stop myself out. So the best thing for you to do is the same thing, is to stop yourself out if prices close below this 58 level. So you have two stop levels. One, either if prices close below this trend line, or if prices close below 58 rupees. So yeah, so you can have your stops, and then you pretty much don't need to worry about anything else. If prices go against you, you will be stopped out, and you should be happy with it, because you have accepted that you are willing to take the risk to possibly see a move towards 90s. Now everything goes to your price target, so therefore you obviously need to know where potential risk level is. So let's quickly highlight everything that we have spoken about. We know that the overall trend is positive and favoring the buyers. As of now, we have a small consolidation phase through a possible flag formation. We still don't have confirmation because we don't have a breakout yet. We have identified two stop levels. One is below this downward sloping red trend line, and the other one is below 58 rupees. And assuming that we do see a possible breakout, the pattern gives a price target of roughly around 90 to 91 rupees. So overall, at these prices, you're roughly still looking at a 50% upside from here, and your downside risk is it's roughly around 5 rupees from here, so just around 7.5 to 8% of a risk. So from a risk to reward basis, that's a really good return. So possibly definitely something that you should have on your watch list. And if we do see a breakout, maybe if you like the trade, you can take a trade on it. So that's it on Sunshine Holdings. If you have any questions, don't forget to comment below, and I'll be happy to answer your questions. So let's quickly move into our final stock, which is HBS. So let me take these out. Okay, so HBS is a recent IPO, and we know that after this sell-off over here, prices did round over, and we saw a nice breakout above this IPO high, which is roughly around 26 rupees, and then we saw prices move from 26 all the way towards around 37.50. So that's a pretty decent return after the breakout. So what we're going to look at now is obviously moving averages. So as of now, we don't have the 50 and the 200 day because we still don't have enough price action for it. So let's quickly add the 10 moving average. Give me a second. Yeah, okay, cool. So here's the 10 moving average. So as of now, you can see that the 10 moving average is acting as clear resistance. So you can see the prices on this candle over here did break down, and since then we are having multiple stalls at around this level. So simply when I say stalling, that simply means that sellers are coming in and making sure that prices don't close above this moving average. So you can clearly see not just a couple of times, pretty much 1 2 3 4 5 6 7 8, so pretty much throughout the last 8 sessions, constantly prices have been failing to close above this 10 moving average. And to make things a bit more difficult, the slope is negative, which is much more important than just where prices are around the trend on the around the moving average. So clearly over the short term, it is signaling a possible period of consolidation. We are yet to see anything confirmed, but as of now we do have a possible sort of pattern over here. You can't exactly call it a pennant. I wouldn't call it a pennant, but we have trend lines which you can draw. And as of now, I think the best sort of risk level that you can have is above this trend line. So as of now, you can clearly see the prices are in a period of a sketchy area where it's not showing exactly where the overall trend is going to be. Also, you have a possible reverse cup as well. So simply what a reverse cup means, it's a bearish pattern. So simply the opposite of of a cup and handle. So it's more like an inverse cup and handle. So you can see that this part over here is the cup formation, and then you see the handle forming over here as well. So this is a possible bearish pattern. So again, we have not yet seen proper bearish patterns. I think this is one of the rarest times that we have seen a bearish pattern. So let's quickly look into it. So overall, how we measure price target is very simple. You take the height of the pattern. So the highest point over here is at 3760. You take the corresponding point which directly measures it down to the trend line. So roughly at around, let's say 29 rupees, and let's take this at 3750. So you get roughly around 8.5 points as the height of the pattern. So assuming that we do see a bearish breakdown below this upward sloping trend line, say that we see it below 30 rupees, then you're roughly seeing a move below towards this 22 level in terms of a price target. So roughly around 22 to 2150 is what you're looking at. Now overall, what's important to note is that we obviously have support over here as well. So we have a possible support level between this range over here. So overall, our support will be roughly around 25 to 26. So that's where our support is going to be. So another important point to note down is that usually bearish patterns don't always materialize. Most of them, almost all of the time, do fail, and the ones who do break down rarely go to the intended target. Sometimes the best way to measure target is just to take half of the price target that you will take, assuming that you take the entire value and you measure it down. So we had roughly around 8.5 points. So instead of taking 8.5, we take half of it, which is roughly around 4.25, and then we measure it down from this level over here. Then we get our price target roughly around 25 to 26 rupees. So that kind of is a better level to watch for than just watching at 22. I don't think if we go to 22, but if we are to see further weakness in price action, then most likely we might see a pullback towards this level over here. So another way that we can look at it from a bullish perspective is when can we possibly get long this stock. So for me, I think if we break above this low over here, this lower high over here, which is roughly around 34.10, if we do see a valid breakout above 34.10, that is where I would possibly look to get long, and most likely we might see a retest above the all-time highs, and most likely we can expect further upside to create a new all-time high on the stock. So there are two ways you can trade this. So the best thing obviously as of now is to stay on the sidelines until you get confirmation. So one way is obviously if it's a bearish breakdown, then obviously you need to avoid the stock. most likely we might see a retest towards this 25-26 level. However, from a bullish perspective, the best thing that I would like to see is prices break above this 34.10 level, and then if so, we might see a breakout to the upside and a retest of all-time highs and possibly a new all-time high on the stock. So overall, let's quickly revise everything that we have looked at so far. So as of now, we know that from the moving averages we have looked at, the 10 moving average is obviously the 10 moving average is obviously a problem for the buyers. We can see that constantly sellers are coming in around this moving average. So we have support from the 20 moving average as well, which is rising. However, what's more important to note is this trend line over here. So if we are to break below this trend line, then most likely we might see a retest of around this 25 to 26 level. However, from a bullish perspective, a breakout above this 34.10 level would most likely provide us a move towards this all-time highs and possibly even a new all-time high. So this stock, unlike what we saw with Sunshine, has two ways you can trade it. However, unfortunately, we don't have short selling. So therefore, if it's a bearish breakdown, you avoid the stock. If for you to get long, for me personally, I would wait till 34.10. But obviously, none of this is investment advice. So therefore, you need to obviously make your own choice on whether you want to get long the stock or you want to stay on the sideline. So that's perfectly up to you. This is just to help you out on adding more information into your overall analysis so that you can build up a better thesis on what you want to do with a certain stock. So overall, we have looked at two different counters, and most importantly, HBS on the other hand has given us a different view on what bearish patterns look like and how we can measure targets and so on. So I hope that you guys learned something from it. If you guys have any questions about this or Sunshine, obviously don't forget to comment below, or else you can obviously reach me out on Twitter as well. So that's about it. I will most likely bring a new video tomorrow as well. So if you guys have any suggestions on what I should do for tomorrow, don't forget to mention in the comment section, and I'll go through it and see which one has the most amount of requests and do that video. So thanks guys, thanks for watching. I hope you guys have a really good day, have a really good rest of your day, and hope to see you guys soon. Thank you guys, thank you for watching.